Hi, we're going to take a look to see whether Meta or Facebook is cheap or not. I'm going to head to Felix and I'm going to type in under Company Analytics Meta. And when I get to Meta Platforms, as Facebook's now called, I'm going to go down to the trading comparables section, and it's just done an initial cut of trading comparables, and I want to change this. I like Snap because it is a social platform, but I'm going to take out everything else, and I'm going to replace this with the FANGs. So we're going to put Amazon in there. So these are really big, fast-growing companies. Apple, I'm going to put in as well. I'm going to put Netflix in because that was one of the FANGs, and Google is now called Alphabet. So I'm just going to put in Alphabet, and those are our comparables. And Felix automatically sorts them according to their size, the market cap. Now, so I'm going to zoom in a little bit. So let me just go down just so you can see this. And then let me move myself down a bit, or maybe if I make myself a little bit smaller, there we go. So you can see here, Meta is valued at 8.8 times enterprise value divided by calendar year 1 EBITDA. So that means 2022's EBITDA, enterprise value divided by 2022's EBITDA. And all the companies are calendarized to the same earnings period. So we've got a valuation metric there, and you can see the median is 15.2, but Meta is valued 8.8. So it looks cheap, and in fact, it's the cheapest company here. But we also need to take a look at the fundamentals. And fundamentals are really driven by two things: margins, which gives you an indication of its competitive advantage, because the stronger the competitive advantage, the higher the margins, number one. And also it gives you a sense of return on capital, but a sense, not an exact calculation, and growth. Now, generally speaking, the market prefers growth as the most important component of this. And you can see Meta's got a growth rate, a forward growth rate, compound annual growth rate of 12.06%. That compares pretty favorably. It's higher than Apple, it's higher than Netflix, and it's pretty much approaching Alphabet or Google and Amazon. So actually it's pretty middle of the pack in terms of the growth rate. And it's got by far the highest margins of any of these companies. In fact, double the median. So you're getting double the margins. You're getting a mid-pack range of growth. And yet it's valued far more cheaply than any of these stocks. So on this basis, Meta looks like it's a screaming buy. Now, just bear in mind that this is a relative value basis, not absolute value, but certainly at 8.8 times EBITDA on a forward basis, that does genuinely seem pretty cheap to me.